following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Dave in Clearwater. Hey, Dave, Happy New Year. What's happening, man?
Happy New Year to you, my brother. How are you, sir?
I'm doing great, man. How you been?
I am doing well, man. I'm doing well. Can I throw a quote out at you?
Sure.
In the market, somebody knows something. Someone always knows something. That statement was made by a great trader by the name of Tom O'Brien about 6-7 years ago.
Oh, yeah?
And it kind of hit me like a brick. You're right. Somebody always knows something.
Hey, Carlos, what's going on, brother?
I'm calling you back, Tom. This morning I had the pleasure to talk to you and your son, and I don't want to miss the opportunity to talk to you again.
Well, I think you made some money on this bond.
Oh, yes, Tom. Your newsletter helped me.
That's a beautiful thing. We appreciate you growling and prowling with us out here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Don't take anything personally. Ignore the opinions of others. Whatever people do, feel, think, or say, don't take it personally. Others are going to have their opinion according to their belief system, and so whatever they think about you is not about you, but is about them. This one's an interesting one. Wrap your head around. Market-wise, let's take a look at it out here. We have the Dow Industrials down 49, NASDAQ up 41, S&P's down 5, gold contract up $4.10, trading at $12.4760 an ounce. Silver up a penny. $16.42 an ounce. Platinum is up $6 at $9.28 an ounce. You get copper up 3.5 pennies at $2.60 a pound. Light sweet crude down 85 cents, $42.66 a barrel with monster volume. Bottom line, folks, is this oil contract just can't handle higher price. It's barreling down, and it has the juice to get into this $40 level. Notes, 10-year note up 2 ticks. 30-year bond up 1 tick. What they have done once again is that they rejected lower price, have lighter volume. Bottom line, they in both in an ABC structure up. You're at 126.27 in the 30. Your price projection there is a couple points higher, as is the 30-year. The 30-year is at 157.19. That price projection is 129.30. So 159.30. Big numbers. King dollar. King dollar just can't hack it, folks. It's pretty amazing, actually. So King dollar, sell it down again today, down 197. We're at 97.215. The euro is trading at 111 to the U.S. dollar. The yen is trading at 111 also to the U.S. dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? So if we take a look at the SPY, SPY is going sideways, slightly lower. Bottom line, you still get light volume. Yesterday, we pulled back with light volume. We did 56 million. Looks like we're not going to do more than that. So bottom line, you're going to need higher volume in order to get the lower price in the SPY, as we do in the Dow Industrials. Dow Industrials also pulling back with light volume. You're down 44 bucks. You had the gap there at 21,384. Excuse me, folks. And you can almost make the case that, yeah, come down to the 21,390. We'll see what type of volume that we do have coming into the close. Thus far, inside the the NYSE, bottom is that line is that you have light volume. The NASDAQ is moving higher, and the volume is not that bad. Let's go look at the composite. We take a look at the composite out here. There she is. Okay, so the composite right now is trading up 42 bucks. We are right at the level, the higher level, meaning we had the downdraft that occurred a week ago, Friday, the 9th. That's when the composite went from 63.41 to 61.37. We got the counter trend bounce, and we're right at it right now. It's just 62.37. Today we hit 62.33. We'll see how it's going to handle these highs up here as we come into the close. If we take a look at the NDX 100, what you're going to see is that it's an anemic bounce. So the NDX is going to give us a pretty good clue today if, in fact, on Thursday and Friday, this thing wants to run to higher price. The reason being is this. The top of this counter trend bounce is 140.93. Now, that being said, you can really take the 140.59 area and kind of say, okay, if you get over that, it can not only go into the 140.93, but that can make a run all the way up to the lows of the last highs, which is actually quite a move, which is 142.60. So coming into this close today is going to be really interesting watching how this shakes out. And the number that I'm going to be looking at is 140.50. And that was the high of yesterday. The day before was 140.59. Going back on the 13th, you get 140.56. So you're right in that area. Gold contract. What do we have with gold? Gold still needs to catch a bid, folks. Gold contract out here. We did reject the 1241.70. 1240 flat out is the sign of strength that was established out here on the 17th. You know, so what we're going to see out here, what we're getting out here today is that you got into that strength once again. We did have lighter volume, and now it's trying to get out of there. And we'll see as we come into this close if, in fact, it can basically get some traction. We take a look at the 10-year note. 10-year note did it again, meaning just rejected lower price. You're in the higher range. This thing wants higher price. You know, the 126.21. 30-year also wants higher price. And if we go over to good old King Dollar, what you're going to see, King Dollar just can't handle it again. There's some sellers inside King Dollar. It's pretty wild, actually. So we're at 97.210. The amazing part about King Dollar is that it's not only can't get a dead cat bounce going, it can't even hold $97.480. Now, 97.480, folks, is that was the first bounce that we had coming off the low that was established on the 22nd of May. And a normal bounce should have brought it up to 98.265. Not even close. What do? Right now, yeah, we're back inside the lower range again. This sets up, bottom line, you know, another test of at least the high of the low, if not the low. The low that was established, which was on the 14th, that's where we went down to 96.020. We rejected that price. However, when we rejected that price, you have a high volume low there. So that wants to get tested. The real key is going to be, does the high of that low basically give you some support on the way down? Well, we'll find out. We take a look at inside the Dow Industrials. Well, hell, actually, let's go right to the oil market. So the oil market, folks, this baby is one of the only reasons that even today that the S&P and Dow is back slightly. What you have is that oil is down and down with big volume. We've already done, a million contracts. We haven't done a million contracts, man. I don't remember the last time we've done a million contracts in the oil market. So, baby, they're flushing that thing down. And you're at 42.65. No reason you can't make that run to 40. You stay right there, folks. We'll be coming right back. Our phone number is 877-927-6648. Be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's go inside the indices and see what's moving these indices out here today. So we start with the Dow Industrials. The positive inside the Dow, you have United Health putting 11 positive points, Merck's putting 6, Nike's putting 6, Disney's putting 6, Walmart's putting 6. Taken away from it, Caterpillar has a negative 22, Goldman a negative 16, Chevron negative 13, DuPont a negative 12, IBM negative 9. Inside the NDX 100, what do you have? Bottom line, just as yesterday, it's all about biotechs, folks, okay? Well, first off, you have CA. They're going to go private. That's up 13%. Then you have the biotechs. You have Insight is up 7%. BioMarlin is up 6%. You have Celgene up 5.5%. REGN, you get Regeneron. This is, look at this baby. This baby's up $25 at $5.70. If we go over to the IBB and take a look at it, what you're going to see is that in 3 days, we just went from 290 to 315. You take a look at this, and this is, put this back in a 3-year. And what you're going to see is that this has been in a consolidation out here since the January 2016 level. Bottom line, it's taking that baby out, and you're going to have volume behind the move. So it's over 301. That is going to set up a run now up to the 343 area. And what that's all about, by the way, too, folks, okay? And this is where someone always knows something. Bottom line is that instead of the administration and Trump going after drug pricing, like supposedly was going to happen inside the election, it's just going to be the opposite. They're going to get together and they're going to allow the drugs to come back, to get approved quicker, and then make deals with the insurance companies. And the bottom line, drugs prices aren't going down. And the way that the IBB is going, I suspect that drug prices are going to go up once again. So pretty amazing watching that whole thing shake out. We take a look at some of the higher volume stocks in this market right here. This, yeah, that's right. The drug companies are getting a big, sweet kiss, no doubt about it. So inside the higher volume stocks, you get Advanced Micro up $1.16. Chesapeake Energy's off 35. You get Ford down 6. Micron Technologies up 99. Kruger is flat. You got GE down 33. JCPenney's off 25. Nike made a deal with Amazon. With Nike is at $52.50. That's up 94 cents. Now, Nike's having a hard time, period. Nike's off a high of $67. You're at 52. We put this on, let's put this on a longer term basis. Okay, so yeah, this is going to be interesting. So Nike looks like it's first going to try to make a run for the higher price versus lower price right now, 53, 54. So what the announcement today is on with Nike and Amazon, folks, is that Amazon are going to sell Nike shoes direct. Amazon's going to begin selling Nike shoes directly through a brand registry program designed to keep counterfeit goods off the site, according to people familiar with the situation. The approach lets Nike take greater control over how its products are sold, helping ensure that knockoff shoes aren't offered by third parties on e-commerce marketplaces, said the person who asked not to be identified. Shoes are popular products for counterfeiters, and Nike's global brand is especially a great target. That puts pressure on the athletic apparel giant to police online sales more aggressively. Bottom line is that if you want to see what that's doing to Foot Locker, FL, they're getting smoked because what you do have is that now Amazon, Amazon is just taking out the middleman. Foot Locker, now this is quite a hit. This is where the aspect that, you know, I'm not sure whether this is earnings or people knew this prior to it, but Foot Locker, folks, in May 12th, it was at $77. It's $47 right now. It's down another $2.70. We take a look at this. We put this on a monthly basis, and what you're going to see is that you're breaking your swing point, the lowest swing point. You already took it apart with volume, and it's not even the end of the month yet. So the last swing, now this is a lesson if you want to see what happens with high volume swing lows. So Nike had a high volume swing low at $50.90. That was established June of 2016. It goes from 50, goes up and tests its high at 79. It does the test with lighter volume, falls apart 5 months later, rips apart the swing point. Now it looks like good old Foot Locker is going to make a run to $35. $35 is the last place that basically it has any volume after croaking this swing point. So you can take 50. Yeah, it's $25. Actually, when you do a price projection after consolidation is just broke, you're talking $25. Pretty intense. Now, what you're going to, let's go take a look at Chipotle. That also is coming down with a big volume. Now, they made an announcement that bottom line is that they're not making progress as they had hoped. Chipotle also has a high volume low out here of 362. The high of that is 417. Now, this is where it's going to get dangerous for Chipotle, is that the high volume low, the high of a weekly of the high volume low is 417. We're at 416, and we're barreling into this with volume. It's down $8.73. You've done 1.3 million. That is saying the probability gets much higher that's going to go after the low, which is pretty intense. We go take a look at the Costco's of the world, see how that's shaping up. Costco, look at this. This is going to take another leg down, too. So Costco had gapped down as soon as Amazon knew it was getting into as soon as the rest of the market understood that it was getting into the food business. Bottom line, you went from 181, you were at 162. And now what you're going to have is that you are hammering lows, and you're hammering the swing low at monster volume. So the swing low itself has 12 million, let's say 15 million. Take the bigger one. We've already done 23 million on a weekly. This thing wants to blow that apart. More than likely, we're going to see Costco down to 154. Target, we take a look at Target and see where Target's running out here. Target's already been a mess. That is trading at $50.46. Oh, this is intense. This is going to be a big ABC down. Ooh, this is dangerous. So Target, A point is 79.52. You're talking about big money, $27. That's a $30 price target. And $30, that's going to be pretty intense because the low of 2008 is $25.60. That is going to be, that's a hit. Walmart, WMT, let's go take a look at Walmart. So Walmart doing a counter-trend bounce today. Walmart blew apart last week at 56 million shares, hit a low of 73, going up with 6.8. Walmart's also in trouble. It's going to be interesting with the Amazon deal that, they are getting into everything. And I suspect, at some point, it's going to be, we'll talk about it as soon as we come back. Dow Industrials right now, down 55. NASDAQ is up 42. S&Ps are down 5. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. And folks, don't forget, no matter where you happen to be listening to us right now, that you can get us 24 hours a day right on your cell phone. You go to TFNN.com in your browser. On the right-hand side, just hit Tiger TV. You're going to get some great HD quality video as well as audio. Now, let's go over inside the XLE. So the XLE, folks, which is the large integrated oils, have been leading the contract down. You know, if we take a look at the XLE right now, and you go back the last year, what you're going to see is that the XLE topped out December 12th. Pretty intense, at $78.45. What we've done out here today is not only go south, but it looks like we're going to have a very large ABC structure on the way down. Now, let me look at this, what the most conservative way we can look at this. Okay, so it would be, you're talking 68. No, it's not that big, actually. It's only $4. Yeah, it's interesting. So right now, it's kind of right where it is for an ABC structure on the way down. It's approximately $63, and you're at $63.99. We put this on. Let me put this on a monthly. I get it on a monthly. Yeah, this is going to make a run. Okay, so on a monthly, this is what you have. You have a high volume swing low at 49. That's left over from January of this year. And this is a classic, too. If you want to see technically a classic, watch, I'll set this baby up and you can take a look at this. This is like just such a classic that it runs right into the initial downdraft. You know, the XL, well, actually, let's see what kind of type of retracement it is so you can really set this up. So we go from there to there. This is wild. Okay, so from the first leg down, meaning from the high, June, you know, you went from, this is actually not the last leg. This is yeah, I have this on a monthly now. So on a monthly, June of 2014, the XLE was at 101. It got destroyed. It went down to $49, so a 50% move down. Well, off that 50% move that was established in January of 2016, it did a 50% retracement. That retracement in itself was going into the downdraft, and it couldn't handle it. $77.71. That had volume of 769 million, and we had 296 million going into it. Okay, so you do a 50% retracement, which is a normal retracement in a market up or down. Can't handle it. You start barreling down again, and so now what this sets up, where it sets up either a test of the high volume low, or it very well could, when you have a high volume low or a high volume high, what happens, let's talk about the high volume low first, is that the high of that bar is going to be heavy support, you know, on the way down. So we'll see how it hits it. That's $60.78. If we go over to ExxonMobil, we get Exxon and Chevron are the largest weighting structures inside there. So Exxon is at down 92 cents right now at $81.39. That, you know, this has major support kind of right where it is. So this is going to be interesting to see if the thing is going to break the 80.31 once again. Because what you did have is this. Now, this is where it's tricky, is that Exxon last week had a nice day, okay? It goes, the prior week it's down at $79.40. It gets all the way up to 83, and it has some volume behind the move. That being said, and depending on how long you've been listening, you've heard me say this many times, when you get that and you can't take out a swing point, it's a problem. And that's exactly what happened with Exxon. Bottom line is that you got to 83.69, your swing point was 84.25. It's like you can't even make it to that. But that's a problem, child. And then you come back downtown again. We go to Chevron. We take a look at Chevron. Oh, Chevron's leading. Interesting. Now, Chevron at one point was much stronger than Exxon. Now what Chevron is showing is that this thing is barreling now. This thing wants lower price, man. This is going to be pretty intense. So Chevron's down $1.97. This will go after the 102.55. And if you break that with volume, then you're going to have some problems, bigger, larger problems inside the S&P as well as the Dow. Because what you do have inside the S&P and the Dow is that, you know, SLB, Schlumberger, we can go through a few more of these. Schlumberger, you talk about breaking to a new low. This has gone from $87 to $65 in 6 months. And on the longer basis, okay, so you're going. This is already going after a swing low. Now watch. This is where you can get a clue as to how I just had brought up Chevron and Exxon and the XLE, and I was talking about the highs of the last low, the high volume low. Well, Schlumberger, and I was talking about how you're going to come into it. Schlumberger is already into it, and guess what? We're coming into that with volume. The high of the low is $72. You're at 65, so it's already taken it apart. The low is 59. That is problematic for the oil business in general. If we go over to rig, there's a question, is rig going to go BK? Rig is at $7.81. And this here, I know we brought this up before. This is wild, man, even when I brought this up, because I got to bring it back even further. Yeah, this is a problem. Yeah. Rig, you know, this is pretty intense. So Rig was a stock that was at $163 in 2006. You have a, yeah, Rig's in trouble. Rig could go bankrupt. Yeah, that's possible. Let me bring this back further. Rig's under everything. So when you're under everything, yeah, the only place left next is zero. It broke. Oh, here it is. Okay, $7.66. This is what you have, though. Okay, I have this on a quarterly. $7.66. $695 million. Well, did it hit it yet? No. So Rig's going to go after. Oh, this is pretty cool, actually. So check this out. This is today, folks. So the low in Rig in the month of March is $7.66. We hit $7.67 today. Let me bring this back. I got to see how this hit this on. So I need two. Oh, this is going to be a problem. So there it is. Yeah, we just whacked this low with much higher volume. It did 22. Well, actually, hold it. No. Yeah. Well, no, we're not going to. It did 22 million shares at that low. Right now, you get 16.2. You stay right there, folks. We're coming right back. Our phone number is 877-927-6648. Dow's down 69. NASDAQ is up 38.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2019, 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. And if you want to take a look, we're just talking about rig. This is pretty intense. You talk about a contraction. So first we talked about it technically. Look at this fundamentally. This is pretty intense, man. You talk about so in 2013, folks, right, they took in $9.5 billion. They expect to take in $2.8 billion. They are only taking in, next year they plan on taking in 2.6. So next year it's even less than this year. What's so intense about that? They were taking in $2.6 billion a quarter every 90 days in 2013. Now they expect to take in that in a full year. So bottom line, you get some monster problems here. This year they plan on losing 55 cents a share. Next year they plan on doubling that, losing $1.06 a share, and that's what they're telling us. And you have 391 million shares. So bottom line, they're saying next year they're going to lose approximately $391 million, maybe $400 million. Bottom line, problems in paradise, and that whole business has changed. That's the bottom line. Yesterday, if you pull on Bloomberg, if you pull wind power, Bloomberg, Southern Texas, there's a great article there, folks, about now picture Southern Texas, huge amount of oil. What has also happened there, though, is that the large wind companies are there, and it's not that they're eating the oil companies' profits. They're not. What they're doing is that they're eating the gas company profits in a huge way, though, because in Southern Texas, what happens with wind power is this, is that when you and I, use our air conditioners midday, right, that's when electricity companies get the most amount of money, and they need the most amount of need for the surge of electricity and power, okay? Bottom line, the only place in the country that fulfills that on a continual basis is Southern Texas, and it's called the convection of the Gulf of Mexico. So what ends up happening is that their wind is tremendous intraday, and you may have seen the people surfing behind the big freighters out there. Bottom line, it's a great article, and what the article is about is the wind power companies, big public companies, by the way, that are just eating alive the gas companies, and the gas companies actually are going to have to change their business plan. Now, that being said, what does that do? Well, guess what? Energy is energy, and if you're supplying the big power companies, which that is happening, and that's going to happen more. Why? Because they got basically rewarded for putting the wind turbines up. I believe there's 900 monster wind turbines there that are powering, and they're powering in a huge way. So The rest of these, let me go look at Diamond Offshore. Is that still public? Yeah, so Diamond Offshore, this is hitting a low today. It's at $10.30. This is another ABC down. Man, these things have got killed. Yeah, so this stock has also gone from $100 down to 10. We pull this back. At least this hasn't hit its low yet. Its low is, oh, no, it actually has. One second, I gotta pull this back a little bit further. So this low is, let's see, I'll go back 50 years. How's that? Oh my God, that's pretty sick. So this is traded to $7.20. And if we take a look at the numbers here and see how much they've contracted, so they've got cut, not as bad as rig, but pretty bad. 2013, they took in $2.9 billion. This year, 1.5. So they got cut in half. Next year, 1.3. The difference here, though, is this. This gets interesting. The difference is that this company is still making money, and they expect to still make money. It's just less money. Yeah. Their business, and the business segments goes like this. United States is 18%. No, 3-year growth. No. United States is 548 million. South America, 435. Europe, 345. Australia, 238. Let me go over to rig for a second. I want to see how that's broken down on rig. It's not broken down. Bummer. Yeah. Okay. Bottom line is that they're in trouble. They're in trouble. And what you do have is that I expect here, if we go over to let's go into the gasoline market, because we're going to have very inexpensive gasoline going throughout the summer. So gas is unleaded gas is trading at $1.40. That's down $0.015 today. That has now gas also, folks. That broke down last week. You know that on the 14th, that ripped apart its swing point. If we take a look at this and we put this on a continuous contract, I believe this is gunning for like $1.26. We're at $1.40 right now. This thing's gunning for $1.26. It's pretty intense, you know. And you know, you had the EIA numbers out today. Bottom line is that you had a drawdown in the gasoline stocks, but guess what? Market's not worrying about it. The market's saying, hey, there's plenty of gasoline out there. There's plenty of oil out there. Bottom line is you're going to have to market down in order for us to buy more of it. If we go over to the GDX and we take a look at these gold equities, what you're going to see is that we finally caught a bid. You had the GDX come into the lows yesterday, tremendously lighter volume, 2175. You had a volume of 31 million. You know, you were going into 48 and 66. You are up today, and we're right where we got to get back inside, and that's $22.09. You're right at it, too. We've hit 22.12. I want to see this thing close inside of that. And what that is, folks, is this, is that when we came down on the 14th, which was last Wednesday, that's when the Fed came out with the meeting at 2 o'clock, what you have is that day we had monster volume. And there's a case to be made. Was that pushing its highs or pushing its low with volume? Well, you don't know, because it's right in the middle of that consolidation. That's one of the reasons that 2209 is so important, because if it gets back inside that, then you have a higher probability that's going to try to get to the top of that. And when I put that together with the dollar index, that is where it starts getting real intriguing, because that dollar index continues to, it just can't handle price. And, you know, it's going to be intriguing to find out, you know, at some point, you know, who's the monster seller inside the dollar. And if we go over to the euro, we take a look at the euro. Euro out here caught a bid today, you know, at 111. That's the lower end of its consolidation, but it didn't break that consolidation. So bottom line is that it looks like the dollar wants lower price, euro wants higher price. Dow Industrials right now down 55. NASDAQ is up 45. S&Ps are down 4. Percentage-wise, what you have out here, you have the NASDAQ up 0.7%. The Dow's down 0.2. S&P down 0.1. We're going to be right back, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow Industrials right now down 52. NASDAQ is up 45. Let's go over the NASDAQ because it looks like the NASDAQ is going to finish at the high end of this little consolidation after we did that downdraft on the 9th of June. And if that's what we got, we're at the top end of this. That'd be saying that it's going to make that run 62.43. That'll be easy to do. It's only $40. And if we get that, what you're actually going to, I suspect you're going to see, is that it can make a run for the lows of the last highs out here, which is 62.69. Yeah, that makes sense. That's 62.69 is only another $30, $40 up. We take a look at the Qs. Qs seem to be set up the same way. Yeah, the Qs are up 140 right now. They're at the highs. 140.76. That's getting over the highs of the last couple of days. The high of last week was 140.93. Now, it has light volume, but bottom line is that you stand at the top of that trend, that'll go for it. We take a look at the high flyers and see where they're at. You get Apple. That's that's up 78 cents. That's really a flat market on Apple. That's not looking too good. Facebook, different ball game. Facebook came down off high of 155.59, and guess what? It's going to go for it. You know, you're right. We are 153.97. Google is up $9. This can go for the lows of the high, which is $9.94. Right now, you're at $9.78. And good old king of the hill, Amazon. Amazon's laying right at these highs. We're at 1,001 right now. The high's 1,012.99 from the downdraft. Now, Amazon also went to 1,017 when it decided that made the announcement that it was going to get in the food business, then it sold off all day. But that's going to get tested. Microsoft would be the last one to take a look at. Those are the big dogs inside the NDX, and Microsoft is up 42 cents at 70.33. But Microsoft doesn't have any strength out here. What is going to be intriguing is that FedEx last night. FedEx, when we talk about Amazon, delivery, all the aspects above, FedEx come out with numbers. They beat their numbers, good numbers all around, big time. Now, the price spread on Amazon today, the FedEx is amazing, actually. 205 to 213. We're 212.18 right now. That being said, United Parcels couldn't catch a bid. Last night, United Parcels was up $3 when Amazon come out with numbers. Bottom line is that it's down 44 cents. So we'll see how that one shakes out. Different charts. These babies are definitely different charts. So not, they're saying that FedEx is doing a lot better than Amazon in the delivery aspect and what they can expect in the future. What's going to get really interesting here is that there's no doubt that Amazon is growing so much. If you remember, what people were worried about first is that they were going to take over the whole FedEx and UPS. Well, bottom line is that Amazon needs them all. They need the U.S. Post Office, they need FedEx, they need UPS. Bottom line, they need it all above. Let's go take a look at Boeing when we start talking about FedEx and start talking about Amazon. Boeing is trading at a high of $199. And it seems that these days, folks, it's all about delivery. It's about the delivery system. It's not about actually what they're selling or buying, or selling in particular. But, because Amazon is the powerhouse, it's about delivery. They're a delivery expert. So if you're a delivery expert, what are they going to deliver? They're going to deliver everything. You stay right there, folks. We'll be coming back with some numbers. Dow Industrials down 56. Nasdaq's going to close at high for today, up 46. S&P's down 4.5. Gold up 360. We're going to be right back, folks.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is TFNN.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Marty in Worcester. Hey, Marty, what's going on?
Hi, Mr. O'Brien. How are you?
I'm doing great. How you been, man?
Not bad. You know, you guys, over the time and with a few of your courses and seminars, you taught me how to fish.
That's a beautiful thing, brother.
Yeah, it's true. And so what happens is I still listen all the time, and to not only you, but some of the others.
Sure.
To, get an idea where the fish might be biting. As far as your services, they're a bargain. When you compare them to a certain prominent man with real estate courses at $35,000 and no contact with the lecturers afterwards at all, and you think of what you guys do for a few hundred, and you can get access and ask questions forever, it's a great deal.
No, we appreciate you growling problem with us out here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's take a look at one of our 4 agreements. Release the need to rewrite. Be impeccable with your word. When you believe something, you assume you're right. You may even destroy relationships in order to defend your position. Let go of the need to defend your position. Market-wise, let's take a look at it out here. We had the Dow Industrials down 57, NASDAQ up 45, S&P's down 4. Percentage-wise, what you have is this. You had the NASDAQ up 0.7%, Dow down 0.2, S&P realistically flat. Gold contract trading up a price point of $380 at $12.4730. Silver flat, $16.41. Platinum up $6, $9.28 an ounce. Copper up 3.5 pennies, trading at $2.60 a pound. Light sweet crude just can't handle price, folks. This is going to be interesting watching how this crude trades out. We're down $1.06. You're at $42.45. That baby looks like, number one, it wants to go after $40, but the last swing low is about $39.85. In fact, let's go take a look at that. CLQ7. So your last swing low, CL1. I actually got to put a continuous contract up. What you're going to see out here is that this baby went down with over 1 million contracts today, which is huge contract volume. Yeah, $39.19. That's what this baby's going to go after. Pretty intense. We got into the $42.20 today. We went to $42.05. That was the swing that was established in November of 2016. So we'll see whether it ends up, number one, holding the $39. Bonds, notes and bonds continue to want higher price. It's it's an ever-ready bunny out here. You have the 10-year note right now trading, yielding 2.158. 2.126 is the low for the last 6 months. Bottom line, we're at the lower end of that whole curve. You want to do a refinance, you want to go buy a house, go do it, folks. Bottom line, those are low interest rates. On a 30-year, you're talking probably about 3.65, right around there. Not bad. When we talk about the 30-year bond, also, bottom line, refuses lower price. This closed at 156.14, and 156.14, folks, is a closing high for this in the last, let's see, how long? This would be from November, I believe, because election night, that's where the downdraft started. Yeah, it did. So we've been going up since since March 17th. It was at 147. You've added 10 points to 157. You're coming into the downdraft. That was a vicious downdraft. On election night, we had gone from 164 to 155. So what we have now is this. You're at 157.19. You have a confirmed ABC structure on the way up with a price projection of 159.30, which is almost 160. So, as we get closer to if we get that price projection, then your probability goes much higher that you're going to go right to the high, which is 164 of that downdraft, which is pretty intense. So when you take a look at the 30-year Treasury, right now is 2.72. King dollar. What do we have with King dollar? King dollar, once again, can't handle price. This is a seller in King dollar. And what we have out here, King dollar down 187 ticks. Light volume, we only did 14,000 contracts, so it's going to have to get more contract volume as it moves to lower price. Bottom line, though, you're in the lower range once again. It just can't handle even a counter trend bounce, which is pretty intense, man. This King dollar should have been able to bounce up to like 98.260. That in itself, folks, would just be a counter trend bounce. You know, when you take a look at King dollar year to date, what you're going to see is this. We bring this up, we take a look at it, and what you're going to see, put this back, we'll just put it back for 1 year. And what you're going to see is that, you know, a year ago, this is pretty cool. So a year ago, we're at 96,600. It runs all the way to 103 and then gives it up again. After the close out here, Oracle came out with numbers. Let's see what they have to say. Oracle closed at $46.33. That's trading up $4 right now, $50.90. And Oracle does have a high volume high, $46.99. Is going to blow it away. Let's see what they have to say. So Oracle revenue, the estimate revenue is $10.45 billion. They took in $10.94 billion. Big number. The earnings estimate, 78 cents. They took in 89 cents. Also a big number. They beat on the bottom. They beat in the top. And that's going to, let's see. Oracle sees selling a lot more than $2 billion in new cloud accounts in fiscal year 2018. They see their fourth quarter revenue. No, that is the fourth quarter revenue. Okay, so bottom line is that they have higher price, they have higher revenue, they have all of the above. The Qs, what do the NASDAQ do out here today? Bottom line, folks, you closed at the higher end. After this downdraft, NASDAQ, the Qs want to go after 140.93. The SPYs, a little bit different story out here in the SPYs. SPYs go sideways. You're down 6 cents, but that's a sideways move. You have light volume. SPYs would need heavier volume in order to get to lower price. Right now, it only did 54 million shares. Yesterday, you did 56 on the way down. Bottom line, you're coming into 84 million. So it's going to need a lot more than that to get to lower price. We go take a look at the small caps. Small caps are going to lead. Okay. Small caps did have an expansion of volume. Small caps came down 35 cents, 22 million shares. Small caps continue to have a hard time. And bottom line, small caps do look like they're going to now try to go after the 139. Right now, you're at 139.45. You stay right there, folks. We'll be coming right back. Dow Industrials closed down 57. NASDAQ up 45. S&P's down 4. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's go over and take a look at the gold market first. Then we'll get our heads wrapped around silver. So gold out here, folks. We need more volume. We need bids. We need all of the above. That being said, you got a slight bid inside the gold market today, and what we did is this: you got to 1241.70. We did 159,000 contracts. So that is testing the strength from the 17th of May. The 17th of May, that's where we went from a price point of 1240 to 1264.70. It came off that level, and you did get some juice. So we'll see what this brings tomorrow. Inside the equities, because the equities actually start leading the contract. If we look at the GDX, nice setup. GDX had anemic volume yesterday. You had a test with 31 million shares versus the 48 million as well as 66. So that was a good number. Now, what you did out here today is that we did 37 million. So you got a slight expansion of volume. You didn't get to a lower low. Yesterday's low was 21.75. Today's 21.76. So you got an expansion of volume, and you got inside the 2209. And that's what was crucial inside the GDX, because that's where it got trashed on the Fed announcement that they were going up at short-term rates, even though the market knew it. That's when we went from 23.42 to $22. We go take a look at the XAU. Same type of setup inside the XAU. XAU, what we had done is that this also came down with anemic volume, 27 million shares yesterday. That was going into 40 million as well as 34 million, and today it caught a bid. It's up. XAU is up $1.14. You're at $80.19. Now, on the XAU, you want to see the XAU get inside $80.77. That number, by the way, if you happen to be in your car, you're looking for the large bar, and you wanted to get inside the lows of that large bar that was generated out here on June 14th. If we go to the Gold Bugs Index, we take a look at Gold Bugs Index. Let's pull this back up. So the Gold Bugs Index out here was up $3.04 today. You're trading 187.78. Yesterday, let me get this. Yesterday we did 19.7 million. Yeah, this is nice. Going into 23 and 28. That also caught a bid. Now, Goldbug's index closed at 187.78. Now, this is much closer to getting back inside it. That would be 188.54. If we take a look at a couple of the high weighting structures inside the GDX, you take a look at Barrick Gold first. Barrick Gold needs a lot of help. It has to get back inside 1586. The 1605 is up 16 cents today, $15.74. Newmont, which is the second largest weighting, that never got outside the lower range, which is positive. Newmont was up 31 cents. We go take a look at Franco-Nevada. Now, Franco-Nevada is a good indication as to where the price of gold wants to go. And so what you have is this, is that Franco-Nevada, we're at $71.34 today. It's at $72.69. It's over the higher range when he broke out. Franco-Nevada broke out May 12th, and it's still in that higher range. So good old Franco-Nevada. Now, this is really cool for the rest of the market. So check this out. Franco-Nevada, last Wednesday, the high was $74.54. The low was $70.70. We're at $72.69. It's eating that bar alive. So that's saying that Franco-Nevada is going to go to the top of the bar. We'll see if it can handle that and get up to the swing high. That in itself is a good indication that we're going to have the gold contract move higher. We take a look at Rango Resources. That went from a price point today of 88 to 89.27. That has to get up into 92. Let's go and we take a look at the silver market. So that is some of the highlights inside the gold market. Silver, S-I-N. Silver, the psycho metal, meaning whether it's up or down, still didn't catch a bid. You know, silver out here trading at $16.40. Light volume, but silver needs a bid, man. That's how this is shaking out, and it has not got a bid yet. Let's go take a look at a couple of the silver stocks. So you got Pan American Silver first. Well, this is good. Pan American Silver caught a bid. You're up 27 cents. And Pan American Silver also got into the 14th. So you're at 16.44 right now. Let's take a look at First Majestic, which is another silver stock. That's anemic. I don't like what that looks like. Let's take a look at Hecla. Hecla's not bad. Great Panther, GPL. Yeah, Great Panther didn't catch a bid. Great Panther needs to catch a bid also. Let's take a look. All right, let's go inside the SCC, inside the copper market. So copper caught a bid out here today. Southern Copper did not. Well, it's up 34 cents, but that's not saying the thing wants to move yet. TGB, which is Taseko Mines. Oh, this one's going to get interesting. So this has had some couple of big signs of strength. 110. Look at this test today. Wow, this is pretty intense. Okay, so Taseko on the 15th of May went from $1.10 to $1.32. Had volume of 3.2 million. Today you had, oh, this is pretty cool, man. This is pretty amazing, actually. This came back on 10% of the volume. 310,000 versus 3.2 million. Rejected lower price. And now this looks like it's going to go make the run for 132. I'm going to pull up iron ore for a second because first I'm going to pull up iron ore, then we're going to pull up Valley. Okay, so iron ore is still $437 a ton. This is down from $670, it looks like, $685 last 6 months. We'll see whether it can get, that's got to get inside $442. If we go take a look at Valley, which is all about iron ore, this is trying to get off the lows. It was up 18 cents today. It tried in $7.95. One of the tigers want to take a look at McEwen Mining, MUX. So this is one of the small caps. That's trading 258. And this needs a bid also. The difference with McEwen, I really like what happened last Friday. Last Friday, folks, you had the indices swapping out a lot of stocks, and that's why you see these spikes in volume all over the place. What McEwen had done is actually was pushing into the 280 with some volume. But, you know, you want McEwen also to catch a bid out here. That's how this baby is set up right now. You stay right there, folks. We'll be coming right back. And, in fact, if you'd like to test drive the gold report on my market insights, you can come over to our website at TFNN. You go to newsletters. If you'd like to test drive the gold report, you can do it 30 days absolutely free. If you'd like to test drive market insights, you can do it 2 weeks free. Just hit the tab, and you'll be off to the races. We're going to be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. EverBank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's go over and we take a look at the financials. So we have the Federal Reserve. Bottom line is that they bring up, raise short-term rates. Let's see what the probability is right now. So right now, this is going to get interesting. So we haven't brought this up for a bit. So last in June, of course, they raised 25 basis points. And the next Fed meeting is July 26th. And your probability of rate height is 0. This is looking at the Fed fund futures. So these trade, and as your trade is trading it, whether they think that it's going to raise, fall, do all the above. In September, right now, there's only a 16% chance that they'll raise short-term rates. In November, there's only a 16% chance. In December, there's only a 40% chance. So what's really intriguing is that this has come down pretty dramatically, because what we did have is that you had over a 50% chance that there was going to be a rate hike in November. Never mind, we're only at 40% now in December. So the first time that it gets over 50% is next March. March 21st, 56%. Now, when we're looking at this again, what you want to wrap your head around is that July 26th is the next meeting. There's no meeting in August, and then into September. So we'll see how this thing shakes out. But that'll be really intriguing if, in fact, you don't get another rate hike this year. The bond market is certainly saying that at this particular point, you won't. The reason I'm saying that is that it's so unusual that when you have a bond market that is going counter to what the Fed is doing. So what the Fed controls, folks, is short-term rates. That's bank-to-bank rate. The theory, which is held pretty good over the course of years, is that as the Federal Reserve raises short-term rates, the yield curve, and with the yield curve, let me bring it up for you so you can see what this shakes out. So inside the yield curve, just picture you got a chart, and what traders are looking at, they're looking at the yield curve from a 2-year, 5-year, 10-year, and a 30-year, all treasuries, okay? And so what they're looking at is that the yield curve normally goes higher right across the curve as the Federal Reserve goes up on short-term rates. Now, just the opposite has actually happened. I'm sure you've heard it many times. The yield curve is actually flattening out. And what that means is that there's not a big differential between the years. And here, I'll just give you what they are right now. So if we look at the 2-year, right now, you lend money to the U.S. government. The 2-year, they're going to pay you 1.34%. If you lend them for 5 years, you're going to get 1.77%. Not much difference, right? You lend them for 10 years, you're getting 2.16. And you lend for 30 years, you're getting 2.72. And bottom line, all of those have gone down versus, well, actually, one second. Hold on. The 2-year hasn't. The 2-year has gone up. The 2-year, we're at the higher end of the curve. So here, this is cool. So let's do it this way. So in the last 6 months, the low of the 2-year was 1.14. We're at the high right now. We're at 1.34. If we take a look at this and you do it on a yearly basis, this is pretty amazing. So in the year, this is just wild. In the year, it was 0.5% on the 2-year, and now we're at the high end of 1.3. Okay, so now at the 5-year, we are at 1.775. The low for the year is 0.9%. The high is 2.1. So you can see what's happening is that this has been coming down, not going up from that part. And that's where the curve is flattening. And the 10-year, the low was 1.35. The high was 2.6. We're at 2.1. You can see how that's flattening down. And the 30-year, the low was 2%. The high was 3.2, and you can see we're 0.5% off that. We are at 2.7. So the way that is set up right now is that is saying that, bottom line, what the Fed is not going to get out of the marketplace, which they need, and to keep going up on short-term rates, is that they're not going to get the inflation bump that they're looking for. The Fed's looking for an inflation bump of 2%. Now, what does happen is that they exclude food and they exclude energy out of that. Bottom line is that, it just seems the energy market itself is getting plastered on the way down. Food also is going to get plastered. It has been getting plastered. It looks like it's going to get plastered more. Evidently, that must be rolling into the rest of the economy. We'll see where it does shake out. Okay, so now let's go into the XLF, because the XLF is also saying that the banks aren't going to be making more money. So the XLF, down 20 cents today. You The XLF, it had a counter trend bounce up to 24.54. That was going right into ICE. It was going into 192 million shares, and you did 117 million. Then you tested it with 58 million. Can't handle it. Inside the XLF, Berkshire Hathaway is the largest weighting structure. BRK. So Berkshire went down 93 cents today. That's off a high of 177. You're at 169. We'll see how it handles like 167. JP Morgan, which, by the way, JP Morgan was looking good yesterday. And that's still not bad today, actually. JP Morgan, not yesterday, the day before. So JP Morgan pulled back 9 million shares. Can't get out of its range, though. The downdraft on JP Morgan from the 21st, that's where the problem lies. Bank of America, BAC. Yeah, Bank of America is weak. Bank of America is down 36 cents. That looks like it wants to run to $22. Goldman's in an ABC structure on the way down. Goldman is tricky, too, because it can't handle higher price. And what we did do with Goldman, once again, you got an expansion of volume. Now, in Goldman's case, that expansion of volume is a big number today. The reason being, folks, is that we did not get an expansion of volume in the marketplace, but Goldman did get an expansion of volume. So that shows that you have a seller inside Goldman. We go take a look at Wells Fargo, WFC. Wells Fargo also gave it up on price. The top of the consolidation is 55. And you're at 52. This looks like it's going to come after its lowest swing point of $50. And Citigroup would be the other big dog in here. Citigroup's actually in pretty good shape. So Citigroup has been a dog, but in the context of how the rest of these look, it's pretty amazing actually looking at Citigroup. So Citigroup, folks, is trading $63. That's down from reverse splits of 2006 of $555. How's that for a train wreck? $570. That is one extraordinary train wreck. You stay right there, folks. We'll be coming right back. Oracle. Let's go take a look at Oracle. They beat numbers. They beat the bottom. They beat the top. That's trading up $3.67 right now at an all-time high of $50. It closed at $46.33. We're going to be right back, folks.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Can't cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Let's go over to the malls. You talk about disruptive technology, folks. Well, guess what? We're living in a world of disruptive technology. So if we take a look at Simon Property. So Simon Property, folks, is the largest mall owner in the United States. You're talking about a company that basically takes in $5.6 billion, all in the U.S., all regional malls. We take a look at this and how this baby is set up right now. We just go back the last couple of years. What you're going to see is you're going to see this topped out at $229 in July of 2016. Right now you're at $158. This, when this extended itself, so in 2009, folks, the stock's at $22. And what many folks had thought is that the malls themselves, commercial real estate, okay, would continue going lower. Because the first high in 2007, this stock before the crash went from 111, and then it went down to 22. Now, what you had happen there, and this is what happened with most of the mall operators and most of the commercial landlords. What had happened is this. So you had the crash. The difference between a commercial landlord and a commercial landlord would encompass the aspect of large mall owners, large apartment buildings, large office buildings, all of the above, okay? And the difference between a company like that and residential is the aspect that these large commercial operators had the same type of mortgage-backed securities. The difference is that they had a much longer time frame in order to pay these off. Okay, so watch how this shook down, because this was really intriguing watching how this shook out. So let's say that you were Simon. You were Simon, and in Simon's case, they had hundreds of millions of dollars of debt. Well, what had happened before the crash is that our rates, of course, were higher, right? So picture that you take we'll just do a mortgage at $100 million. Take a mortgage out at $100 million, commercial mortgage. Let's say, we'll just flat out say it was like 7%. Let's say it's 10%, okay? So we make it easy. $100 million, 10%, you're paying $10 million a year interest, right? Well, what had happened is that when the crash came, two different things ended up happening. They didn't take in that much less income. They took in less income because malls actually got hit, but not like they're getting hit now. So they had the cash flow. But what did happen dramatically is this, is that I gave you, for instance, that it was like a 10% rate. I don't know exactly what it was then, but let's say that it did get this dramatic, meaning 3 or 4 points. You go from 10%, let's say, down to 7.5%. What you had immediately is that percentage-wise, that is a monster move. So instead of coming up with $10 million a year, you got to come up with $7,500, $75,000, right? So, I mean, 7.5 million. So picture that in the aspect of hundreds of millions of dollars in loans. Well, it's just like a refinance. And that's what these large companies did. They refinanced all their debt. They had enough time to do it. A couple of them got really close, but bottom line, they got it done. As they were getting that done, guess what? Stock price took off beyond belief because their expense ratio went down dramatically. And if we take a look at I'll just bring this inside so you can see how this works, because it's pretty cool just really understanding how this whole thing goes. So they took in the same amount of money. If you wanted, and this is where this comes to the bottom line, which you can see. They took in $5.2 billion in 2013. They took in $5.6 billion in 2017. So $400 million. Not that as much, right? Now watch the difference in what they actually earned. In 2013, they earned $4.24. In 2016, $5.87. So they took in only $400,000 more, which is approximately 8%. 8.5%. But yet, they turned around and made 25% more to the bottom line. And what that had to do with the refinancing of it. Okay, now that being said, what you're going to see is this, is that we'll go back to the chart again. And what it looks like out here inside these malls is that you came down, you broke a B point, and we broke it with volume. So it's an ABC structure on the way down. It's a decent one. Your A point on this is 228. Your B is down at 173. So you're talking about 28, 38, 48, $53. Your C is 187. So you're talking about 153. 133. A to B equals C to D. 133. So we get over here. Next stop is going to be approximately 133. Now, the wild thing is that 133 is a low swing from August of 2013. The danger for all of these, and I'll bring up a few more of them, is that they actually have high volume lows at the lows of 2009. So it's going to be, you going to actually go all the way down there? Well, bottom line is that, yes, they can go all the way down there, which is going to be pretty wild if, in fact, that's where this thing wants to go. If we go take a look at, let's go take a look at Tubman, which is TCO. This is another, and so the malls, they're going to figure out pretty quickly what they're going to do and how they're going to do it. If we look at Tubman Centers, this is investment trust, let's see, owns, develop regional shopping centers also. Okay, so this hit a low today, a 52-week low. We pull this back, and what you're going to see here, you're off the highs of 85. You're going after the swing from December of 2013 with volume. This is going after the highs of the lows of 2009. Still got a way to go, actually. $46 is your next level on here. So disruption is pretty intense. And in fact, if we go, one of the targets is saying, look at Kimco. Kimco is a mess. What Kimco Realty is, folks, this is a Class B mall. And if you take a look at Kimco, Simon is Class A, all right flat out. And those walls are going to hold up better than other malls. That being said, Kimco is trading at $17.52. Well, the high of that low is $12.36, and it's going after it. You know, if we go to Macy's, now this is where Simon will get hit. You take a look at Macy's. Macy's is $21. And guess what? Macy's is a great company, great store, great everything. It just went from $73 to $21. This is barreling down into the $17 area. Macy's is not going to go out of business, but Macy's is not going to be beautiful stores at our malls anymore. Whoever can figure it out, and someone will, they'll make a lot of money. Until then, those malls are in tough shape. You stay right there, folks. We're coming right back. Dow Industrials finished down 57. NASDAQ up 45. S&P's down 5. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver-producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. So let's go over and take a look at overseas, what we had out here. We'll start with the DAX in Germany. DAX in Germany out here traded down to 12,708 today, and it did reject lower price. Bottom line is that you end up finishing out at the 12,774 level, and that's saying, guess what? The good old DAX, like the NASDAQ, and the DAX likes to trade like the NASDAQ. That is saying that that thing wants to basically get to higher price once again. The FTSE and the UK, that's a little bit different. Not that it went down a lot today, but that's looking that it wants to go test the lows of last week, which is 73.77. If we go to the Nikkei, we'll take a look at the Nikkei and take a look at the aspect of, number one, where the Nikkei is going to go, where the yen's going to go, so we'll get an idea of where we're going to be trading silver and gold tonight. The Nikkei was down $91 last night, 20,138, and that had light volume. It looks like the Nikkei does want slightly lower price tonight. We'll see how that shakes out. So the gap is 20,087. Looks like it's going to get into that gap tonight. So we go over and we take a look at the yen. If you are trading the gold market, the yen is at 111.36. That had failed yesterday to get over the consolidation that's been in place since May 18th. Intraday, oh, this is a good setup. This is a good setup if you're a gold bull. Okay, so your yen's at 111.36. The low out here today was 111.24, and yeah, that can go for it. You know, so that's going to get intriguing inside the metals market tonight. You know, we need to catch a bid inside the gold contract. Hasn't caught a bid yet. Silver hasn't caught a bid at all. Let's go to platinum and take a look at platinum for a second. PL. So platinum's trading 927.80. Oh, I like what platinum did. Okay, so this is going to get interesting. So platinum caught a bid. This is a nice setup. Platinum went down to 916, closed out at 927, and 927 gets you inside that 922 gauge also. So platinum can actually make a run, a big run. We are at 927. Yeah, this has a good volume spike at 955.50. So that could get really interesting. You know, one of the tigers is saying in the den, the prospects of the Amoco IPO growing very dim. I absolutely agree. Bottom line, folks, is that oil in general, guess what? When you're talking wind power, when you're talking electricity, it's changing, man. You know, it's oil always changes, okay? And bottom line, not only that, think about Uber. Think about the aspect of how many cars we are actually using, how much gas we're using. Technology itself is disrupting it in such a huge way. It's unbelievable. So the bottom line is that, you know, the whole world thinks that they can push it out. Yeah, they'll push it out. But guess what? I think the writing's on the wall when you have your best asset and you want to push it out to the public. The only time you want to push everything out to the public on a basis like that, particularly when you get a monopoly that's so well entrenched, is what? When you feel like it's changing. That's why they're pushing it out. And, you know, you'll hear the hype, you'll hear all of the above. Bottom line, it looks like they have a hard time corralling it. And I think a lot of it has to do with you have energy folks that are actually getting in the wind power business. So they know business upside down. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Everything you need is right inside you. Go have a blast with it, folks. Thanks for being here. Look forward to speaking at 9 o'clock tomorrow morning.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
This is TFNN.